Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. So let's start, and we start with the calendar. Calendar is quite busy, but I think the biggest fireworks are already behind. So we had the rate statement and interest rate decision from Reserve Bank of Australia. And the rate remains unchanged, so they put this rate on hold. That's the longest period in time that this rate is unchanged. This wasn't a surprise, but what was surprising was rate statement. So statement was a bit dovish. We had no major changes, but those changes in words used by the governor caused a reversal, caused an escape from the Australian dollar, and also in addition to this from New Zealand dollar, because those two pairs are correlated. So if Australian dollar is going down, New Zealand dollar is going down too, and actually this created a few interesting trading occasions on the market. Yesterday you had votes on Brexit. All of them got rejected, so no Norway option, no second referendum, etc., etc. Pound is not reacting on it too much. On Friday, for example, we had up and down. On Monday we had the prices going mostly up. Today the price is going down. So pound is a roller coaster, but the thing is that the volatility is low. Traders seems pretty resilient to the recent developments around Brexit. No significant information, no hard data, just pure speculations right now, and just fights between those two camps. Traders got tired. They will not react on every single news for the past few months. They are not so sensitive to those Brexit news anymore, and well, I'm not surprised about that. So this is the calendar, and that being said, we can move to the charts right now, and let's start with the Australian dollar to the American dollar. This is the reaction on the statement on this rate decision. Huge drop. Australian dollar to American dollar is going lower, and we are aiming crucial horizontal support, which was supporting the price for the past 2 weeks. Here it's around 0.707. And we can see a bullish reaction here. So yes, this support is respected and is important. The price creating a bullish reversal pattern here will be a good occasion to go long, but in the short term. And the price breaking this line, closing H4 candle below this yellow area, will be an invitation to go short, will be a trigger to open short position. So this is my view on the Australian dollar to American dollar. As I said, the reversal on the Australian dollar created also a reversal on the New Zealand dollar. So what we first, let me mark this long-term support. Here we have those two factors, so fundamental one from the Reserve Bank of Australia, and also a purely technical one coming from here. This is the false breakout of the major downtrend line. False breakouts are usually strong signals for the price to move in the opposite direction. And this is a false breakout. This is the movement in the opposite direction. In addition to that, on a weekly chart, what we have here is this two candlestick formation, which is bearish engulfing. This is a positive candle, this is a negative candle, bearish engulfing. The second one overlaps the first one. This is false breakout above the downtrend line, false breakout above the horizontal resistance, and in the shorter term we do have a breakout of the midterm horizontal support here at the beginning of the week yesterday. Many bearish factors at once. Well, is it too late now to enter the position? Maybe yes. But if we look on a weekly chart and you would like to trade based on this and the stop loss above this high, the potential target, first one, yes, first one is here, but the next one is here, which makes it an interesting trading opportunity. Because selling here, stop loss on 120 pips, and the take profit is on 700 pips, let's say. So 6 to 1, potential profit is 6 times bigger than the potential loss, which is pretty sweet. And in my opinion, we have high chances of a success here. Maybe if you're not convinced, you can wait for a small pullback here and here, but maybe there will be no pullback at all. This is New Zealand to Canadian dollar. Let me check the specs. Yes, negative swaps, but this negative swap is really low, so it should not affect your long-term position. Next one is euro dollar. Euro dollar is showing us the power of the false breakout. So first we had a false breakout in the beginning of March of this long-term horizontal support and actually the lower line of the descending triangle pattern. This was a fake one, so the price went in the other direction. Then we had a false breakout of this dynamic downtrend line here. False breakout, the price failed to hold above this line, came back below, and we have a strong movement in the opposite direction. Now we have another breakout of the horizontal support, but it does not look fake. It looks like the price really is that the sellers are committed to this one, and we should see the continuation of this movement, because usually what false breakouts are V-shape reversals. So V-shape reversal, V-shape reversal, and here it does not look like a V-shape reversal. It looks like the price is gonna stay here. Now Australian dollar to Swiss franc, where I opened a position yesterday. The price was going higher according to my plan. Very beautiful technical setup, but we had this statement. So this time the fundamental analysis came against me. This can be a false breakout, which will be negative and will create a downswing. But well, that's one of the risks that you have to take when you're trading. Here it didn't work out as for now. Well, as for now the price is reversing, but I would love to see the price here, not here where we are now. We'll see how the thing will work out. Maybe we'll have a reversal, because Swiss franc will be also super weak, so here we'll have battle of two weak currencies. Now I would like to show you DAX. DAX is also having the false breakout here, showing you the false breakout of the horizontal support, and this is the reaction after the false breakout. So a strong reversal, nothing surprising here. The price is aiming higher, and yes, that's how it is. Dollar index bounced from the lower line of the ascending triangle, and dollar index is going higher and higher and higher, and that was after the FOMC quickly recovered. Beautiful upswing. Ascending triangle scenario is still in the game and is doing pretty good. If we will assume that this is the base scenario, we should see the price climbing towards the upper line of this ascending triangle pattern. Then maybe a small bounce, but eventually we should see the price breaking this horizontal resistance. Next one, euro to Russian ruble. Here we have a pullback and a reaction here. So this is pretty interesting. Because we have A quite nice price action setup, so head and shoulder formation or a double top formation, breakout of the horizontal support, and then after the breakout of the support we have a test of the support as a resistance, and test is quite good for the sellers because we got a reaction here, we got a bearish reaction here. So the thing is, according to the technical analysis, as long as we stay below the orange area, the sentiment is negative. And now American dollar to Canadian dollar, where we do have this investment shoulder pattern bouncing from the long-term downtrend line, a breakout of the uptrend line, breakout of the neckline, bounce from the neckline, and the price should continue to go up, but buyers are struggling. Well, we'll see where it will go. It is not such a strong setup anymore like here when the price was bouncing from this line, or here when the price was breaking the neckline. So I will just wait for the situation to develop. Crude oil is pushing higher. Now we have a contact with the upper line of the channel up formation, which can be actually an occasion for the short position, which can be an occasion for the short-term bearish correction. Breakout of this line will be a strong buy signal, because that would mean that buyers don't even care about the channel up formation, which is still good for them, but they want to push higher and higher and higher. So this is pretty optimistic, but the base scenario here is the bounce from this line, contact with the blue horizontal support, and then a further upswing. As long as we stay in the channel up formation, the sentiment is rather positive and we should see the further upswing. Cable, as we said, Friday roller coaster, up, down, yesterday upswing, today downswing. Well, that is not a good place to be. At least for me, when I'm a trend follower, I try to stick to the trends. I try to follow trends, and here there is no trend, unfortunately. The price tried this, the breakout of this lower line of the triangle. It didn't work out. I think that this line will be no longer relevant. I think that this horizontal support will be more important right now. So right now we are above the horizontal support, below the horizontal resistance, and this is the situation on cable. S&P 500, new long-term highs, beautiful, everything is alright, everything is cool, no reason to worry. That is the picture that comes from checking the chart of the S&P 500. American ruble to American ruble, that would be weird. American dollar to Russian ruble. As long as the price was below the orange area, there was a beautiful sell signal here, which is coming from the double top formation. Maybe not a typical one, because the second top supposed to be always has to be higher, but let's call it a double top formation. The price was here, was testing the resistance. That was a typical price action movement as on euro to Russian ruble. But from this point the price should go down. That was also 38.2 Fibonacci. The price failed to go down. Instead of going down, the price went higher, which can possibly mean that this is a false breakout. False breakout below the support, and then we do have a breakout of the upper line of the wedge here. Breakout of the upper line of the wedge is supposed to be a significant buy signal. So this is the situation on the American dollar to Russian ruble. Now Bitcoin, and we love Bitcoin because look at this upswing. And we love Bitcoin. Why? Because we predicted this upswing yesterday. Yesterday we wrote an analysis. You can check this analysis on our website alpari.com. So I said that the breakout of this upper line of this symmetric triangle and the breakout of the downtrend line here should give us a buy signal, and we do have a buy signal here. So the price went significantly higher. This is a nice situation from 4,000 to 4,700, but the real target is on 6,000, which from 4,000 to 6,000 is 50%. We are almost half there, and yes, it is all looking really good. The price should eventually get to $6,000 for one Bitcoin. This is our scenario for the Bitcoin. And now gold, which is continuing the downswing, unfortunately for the gold buyers. But this is the situation. This is pretty sad because I'm a gold bull, but more of a long-term physical gold and stuff. Here, what is happening here is the price making head and shoulder pattern. So a bit shy left shoulder, a head, and the right shoulder. The right shoulder is created by the flag pattern. Flag resulted with the breakout to the downside as expected, because that was what the trend was before creating a flag, and now the price is aiming lower. It is almost certain that the price should aim the blue area or even 38.2. From the technical point of view, getting to 38.2 is nothing. This is just a normal correction, so we should see the further upswing. The problem is that I don't see this as a trend continuation pattern. Maybe, but that's only a bullish dream which is not supported by hard data as for now, but maybe we will get something like this, which is a flag. So we would have an upswing, flag, and an upswing. We can have it like here, bounce, bounce, here, and an upswing. We will see. So far it does not look good for the buyers. Gold looks bearish. Let me recap the situation for you one more time. So Australian dollar to American dollar after the dovish statement from Reserve Bank of Australia is going lower. Price closing today below the yellow area will be a strong sell signal. New Zealand dollar to Canadian dollar, here the negative setup is supported by few factors. From the fundamental point of view, it's the dovish Reserve Bank of Australia, because those two pairs are correlated, and we have a strong bearish technical situation, so a bearish engulfing and a false breakout on a weekly chart. Euro dollar is supposed to go lower because of the breakout of the long-term horizontal support. Australian dollar to Swiss franc should go lower because of this false breakout here. I do have a long position here, but it will probably not work out. So I don't close it, because I will still give a chance to this price. Everything can happen. And DAX is going higher, sentiment is positive, dollar sentiment is positive, euro to Russian ruble, as long as we stay below the orange area, it's negative. American dollar to Canadian dollar, it's still positive. Crude positive in the long term, negative in the short term, but it's not supported by the price action though, because we don't have a bearish price action here. It's just the theory of the channel up formation. Cable, nothing. S&P 500, 100% optimistic. American dollar to Russian ruble, buy. Bitcoin, buy. And gold, short-term sell. So guys, thanks very much for attending the daily analytical report. Thanks for watching. I wish you all the best in trading. Good luck, all the best, and see you soon.